Recent rains have given Aussie farmers a valuable head start on sowing this season's winter crop, but higher freight, fuel and fertiliser costs are squeezing margins across the country. Bendigo Bank Agribusiness latest monthly commodity update says now a question mark hangs over whether the benefit of the rains will offset the impact of ongoing international instability. And our guest, Bendigo Bank Agribusiness Senior Manager of Industry Insights, is Eliza Redfern. First of all, Elizabeth, thank you for joining us.
Thanks for having me, Mike.
Yeah, well, you'd cut to you a bit early. Lucky you weren't doing something.
No, good, no, good.
Tell us about the insights reports from Bendigo Bank.
Yeah, for sure. So we have quite a lot of reports that our team produces. So we've got a team of agricultural analysts effectively specialising in a lot of Australia's key agricultural markets. Now, as we know, there's always a lot that's happening across agricultural markets, especially in this current time. So the purpose of the reports that we produce are effectively to help inform producers and the broader industry as well in terms of helping them make better business decisions. And of course, that flows through to our customers as well. So ultimately, it's all around producing as much information and data as possible and trying to put that into a digestible way. So we've got a few different reports that are available on our website, whether that's our monthly updates, which I think we're talking a bit about today, but also around farmland values, which is always a very topical one, or even our forecasts for the months ahead. So that one usually gets a bit of traction too. So
April's key conclusion, let me read this: good weather for sowing winter crops, but many in the sector face serious headwinds for inputs such as freight, fuel and fertiliser. Is this the worst ag outlook we've seen for quite a while?
Look, it's a good question. I think Australian agriculture, is effectively no strangers to some tough seasons, right? Obviously, in Australia, we get a whole variety of conditions, whether that's weather or whether that's the broader market as well, which we're sort of copping both at the moment on that front. But ultimately, I think it comes down to still some of those significant constraints. So still variable weather conditions, and as you've mentioned, higher fuel, freight, and fertiliser costs. So effectively, what that boils down to is it means that farmers really do have to adapt as per usual, but it does make business more difficult for sure.
How do they adapt if they haven't got any fuel?
Well, it's a good question. I think the level of exposure really does vary, and the reports that we've been hearing is majority of the situations is more around the cost pressures. So ultimately that does mean, that prioritisation on farm does need to occur, and there are different tactics that farmers are taking for that. But ultimately, the question is really around how much longer does this conflict continue on for, and whether that branches out more to, I guess, widespread supply constraints.
The areas that are doing it hardest are horticulture and dairy, and I would imagine that's because of the high reliance on diesel. If this continues, it won't just be the hardest hit areas being horticulture and dairy. It's going to be a lot larger and more severe, isn't it?
Look, it's a good point to raise, and I think for those industries, there are probably a couple different areas. I think producers for both horticulture and dairy are a lot more exposed to some of the higher fuel and fertiliser costs that we're seeing, because they tend to purchase, especially for fertiliser, a lot more in a hand-to-mouth fashion, as opposed to crop growers, for instance, that generally will have a fair chunk of their needs secured in anticipation of the winter crop planting season. So from that perspective, there are, I guess, increased pressures on their margins there, especially as in some areas, they're dealing with variable weather conditions. So whether that's dry or wet conditions. So up in the Murray, obviously, some of the rainfall that they've had during February and March has been a constraint for a fair few horticulture producers.
It's funny, they want rain, and when it rains, it's too much. Then they want rain, and it doesn't rain. It's a hard life being on the farm, isn't it?
Yeah, well, absolutely. I mean, in terms of, just managing some of those constraints or those, I guess, those elements, if you will, that are outside of your control, it can make things difficult.
I just want to know your views on the recent EU-Australia trade agreement. Now, it had positive outcomes for olive oils and wines, which is good, but less for the ag sectors, some of the ag sectors. What are those, if you would mind just letting us know, some of those sectors that were not as happy? And I mean, one of them has been making the news for those who have sheep. It's not such a great deal at the end of the day. What are other areas that sort of missed out?
Yeah, look, it's pretty varied, and I think that this usually happens right when we're talking about trade agreements or free trade agreements. In terms of agriculture is very broad, right? So there's obviously a lot of sectors within that, and the outcomes really can vary. And I think that this agreement is one where we've seen different outcomes depending on the industry. So you've obviously mentioned for wine, for oil. I think we're likely to see cheaper biscuits, for instance, coming into Australia. But in terms of our exported products, again, wine is one of those categories, fruit and vegetable as well. And for some dairy products, there's been, I guess, some advantageous outcomes within there. But ultimately, as you've alluded to, there's been a lot of noise within the media and within industries around some of these outcomes. A little bit of disappointment from some of these industries and groups in terms of what those outcomes have looked like. So I think overall speaking, some positive developments within that. But, as we do typically see within trade agreements, it really does vary.
Are there opportunities to liberalise bilateral trade with some countries, given the situation in the Middle East?
Yeah, look, great question. And I think ultimately this is probably where I defer to the government in terms of their measures, and the groups that are working with them in terms of what areas they're prioritising and what agreements might be in the pipeline. But ultimately, I think it's an increasingly volatile environment, isn't it? I mean, we've seen it with Trump's tariffs over 2025. And even though there are these agreements out there, there are obviously elements that really can, throw a spanner in the works. So I think it's an area that is really volatile, can be quite, not unstable, is probably too strong of a word, but it's unpredictable to an extent. So I think, in terms of the Middle Eastern conflict, and what we're seeing in terms of, shipping routes and things, that obviously trade flows will adapt and change, but there's still constraints there. But it's still a very volatile environment. And I guess probably calling out one key area that we're focused on at the moment, or that industry is looking to, is around the China safeguard quota for cattle, for beef. Obviously, where there's been a lot of talk about that since it came in, or it was announced back in January. Now ultimately we're expecting Australia, because of the volume of beef that we've been exporting throughout the opening months of this year, we are expecting to get towards that quota or reach it as early as May. So ultimately that will have some future headwinds for beef exports there.
When do we see May insights out?
Yeah, so our next monthly update will be on the 9th of May. So it's usually the second Tuesday of every month. And we've got a lot of our other reports available on the website too.
Do you produce special reports on agriculture, or how Australian regions are affected by economic conditions?
Yeah, good question. So in terms of our monthly updates, it's probably the spot to get your most timely updates in terms of how the broader environment is really impacting our agricultural markets and our commodities. We of course have our chief economist who produces economic updates on the website every month as well, so you can access those too. And then we've of course got our deep dives, as mentioned, around farmland values is on the website as well, which gives you, I guess, that really regional level and state level detail, especially when we're talking about the impacts of interest rates and what that might mean for both selling and buying activity. And we've actually got that report coming out on May 5th as well, so keep your eyes open for that one.
If somebody wants to find out more about what you're doing or what Bendigo Bank is doing, how do they do that?
Yes, so the address is really long. So my advice is going to be just go to the Bendigo Bank website or search Bendigo Bank Agricultural Insights, and that should take you right to the spot.
Absolutely brilliant. Thank you so much for your time. Eliza Redfern there from the Bendigo Bank. This is the Country Telegraph.